Your end.
What's that?
You should see it on your end too, I hope.
I don't see it, bro.
There we go.
Now I do.
Oh, now I do. Okay, good.
I got it on my phone too. I was just looking, but
all right. So yeah, we're definitely live.
We're professionals, guys.
Yeah. How many old guys does it take to start a podcast? We're getting better at this though.
It takes practice.
So yeah, practice makes perfect. So I'm excited for this. We're going to be talking about one of my favorite topics, which is energy. I've been writing in the newsletter about that for quite some time. One of my favorite areas. Before we get into that, let's go over the market. Yeah, again, and I wrote about this morning. Sometimes the most important part of a FOMC meeting is the day after. The international investors get a chance to decide what they want to do. The U.S. investors get to sleep on it, see what they want to do, and we're getting some follow through today. Kind of weird, I woke up, futures were up big, hit send on my newsletter, futures went down big. Now they're up somewhat again. I would be using Thursday's low, which is low 549.68. As long as we hold above 549.68, I think that is a low. Is that the low? Who knows? But I would treat it as a low. I would love to see us get above the 200-day moving average, which has acted as resistance every single time this market has tried to move up. So that's concerning somewhat. And I also know this move does look like a bear flag. So if it comes crashing right back down, I would not be shocked. So I would be cautious. But yeah, I mean, for right now, it looks like we put in a low. Jeremy, what are you thinking?
I'm thinking you're dead on with that. We do still have some downside risk. We also have some reversion targets too. So this is a point where we're kind of treading on the edge of the bear flag, so to speak. It can still fail. It can still be a quick reversal. We usually call those like a liquidity sweep, where you get a recovery rally, everybody chases it, and then all of a sudden, bam, it just snaps back down and breaks the low. Very, very much more common than most people think. But in short-term stuff, I mean, I don't want to like show off or anything, but I had targets for the FOMC meeting that were dead on, and all I had to do was look at Monday's relief rally, and pick the highs and the fibs and just scalp them. So I know I'm not the only trader in the market, and that's a lot of what causes a lot of this choppiness.
But you're the best.
Well, I would say among. I can say that I'm equal to my peers at least, and maybe somewhat advanced over a couple of them. We'll call it that.
All right, we'll go with that.
But long story short, we're going to see some volatility. This is a time in the market where there's uncertainty, and some traders who thrive in volatility are absolutely going to take advantage of this. You can't avoid that. And in the meantime, you'll see the chart go sideways in a choppy range, and eventually the range will break. I always tell newer traders, don't jump in the setup, trade the break. And if you see a break, find your target, plan your exit before you even hit the button to buy that. Because the moment you hit that button, you're a fund manager. So you got to have a plan. You get out at a certain point and you wait again, so that if things continue to calmly trend, you can get back in it. You're not going to miss out anything if you have to get back into something after taking profit. There's many strategies in this, but for now, expect more volatility. If you're a swing trader or long-term investor, of course, expect some headwinds and some more range appropriate moves are very possible. We do still have some downside risk, but if you're patient enough to wait through this, if you're not into scalping stuff, it will eventually prevail. I mean, even Buffett's sitting on a pile of cash that could probably put him on the moon if he sat on it. So it's to a point where we just wait and see for all of us long-term traders. But the short term, we love this stuff. Can't complain.
All right, so possible low put in, but let's hope it gets above the 200-day. Pat, you want to introduce David?
Yeah. Okay. So, I've been the kind of go out and find guest guy. So I found David. I read one of his articles where he talked about power demand for data installations growing by like 1,000%. talked about, the crazy demand for natural gas, talked about nuclear is problematic. Then, I read a bunch of his other stuff about, drill baby drill, etc. Thought he was a cool dude. So here he is. David, how you doing? Why don't you tell us what you got going on, dude?
Great. Well, my grandkids would dispute whether or not I'm a cool dude or not, but thank you. I appreciate the introduction. Yeah. Yeah. So it's such an interesting time in the energy space, and data centers are projected to grow so rapidly. I mean, we've got dozens and dozens of new ones coming in Texas alone, where I live, that is really going to dramatically drive an increase in overall power demand in the coming years. And a lot of these companies, these tech companies, are very focused, of course, on their emissions profiles, and initially hoped to do wind and solar with batteries, and realized that that doesn't provide the 24/7 generation they really need. And so then they said, well, let's do nuclear, and the opportunities, at least in the near term, for nuclear are pretty limited. Other than the one deal Microsoft did with 3 Mile Island to reactivate an existing uh, generation facility there at 3 Mile Island. And so it looks like natural gas has a real opportunity because it's cheaper, it's scalable. You can build these plants pretty rapidly if you can get the turbines you need for them, which is a growing problem. And so in the near term, people like Rystad Energy, I was actually quoting from a study they had done on this in that piece you referenced, uh, project that natural gas is going to have a pretty near-term boom in power generation between now and 2035. And then you get into the out years after that, you can start adding in some nuclear, as an alternative or to supplement that natural gas generation. So longer-term boom in nuclear once you can get it all permitted and ready to go. So it's just a real time-consuming thing in the nuclear industry.
So let's dig deeper into that, because I've been telling people a story for a while and investing accordingly, and you've hit a lot of the points I like to talk about. So I mean, it sounds like maybe I'm right, which is a good thing. So what I've been well, what I've been thinking is, there's a lot of uncertainty. I mean, we know AI is the future. What we don't know is China going to win? Are we going to win? Are the Magnificent Seven going to be able to monetize all their capital spending? But what we do know is that for AI to work, it needs more power. And what I've thought and how I've been investing is nuclear. I mean, it's not going to be, windmills. Nuclear is the future, but I've also been thinking, yeah, I mean, that's far away. And we're looking at, SMR technology. So the stock I've been buying for the most part is BWXT, and I'll trade the small nuclear names because, they're not going to make any money for a while, but they're great trading vehicles. So I've thought near term, it's natural gas, but also I've thought coal as well, especially, when Trump every once in a while tweets, about his love for coal. So, give me your thoughts on that thesis. Am I right there? And if I'm not, what am I missing?
No, I think you're right on every part, including coal, which people don't like to talk about because it's gotten such a horrible reputation in terms of emissions. But new generation coal plants are much, much cleaner than what we used to build in the past. And on my own podcast, which I do, a year ago, I predicted that we would not only be restarting mothballed coal plants in the near future, but if Trump gets elected, we would see new coal plants being permitted in this country by the end of, say, 2026 or into 2027, because of the rapidly expanding demand for power generation. And you just can't. One of the big issues here is you need diversity in a power grid. Okay. People say, well, you can do it all with nuclear, you can do it all with gas. But in reality, you need diversification of fuel sources, because some sources perform much better in climate emergency or weather emergencies than others do. We currently get 43% of our power generation in this country from natural gas, and that's probably more than we should. because you do have issues potentially with the transmission systems for natural gas in a deep weather winter storm like we did in Texas 3 years ago. And so it can be a problem if you're over reliant on one source over another. So I believe because it takes so long to permit nuclear and get them built, you're talking 15 to 20 years to develop a new nuclear plant.
Even
You're
with
gonna have to
the
do
SMR
code.
technology?
Yes, even SMR
Oh, wow.
technology,
Okay.
because our regulatory system is so antiquated. Now, the Trump administration will be able to modernize that to some extent and speed it up to some extent. But, it takes time to secure the capital. It takes time to secure the permits. Then you have to get the raw materials, the concrete, everything that goes into building one. And that all is going to consume many years regardless. And so I just think in the next 5 to 10 years, you're probably going to see a need to build new coal-fired power generation in the United States. Not a big boom in it, but in specific locations with specific needs where natural gas may not be the right option. And so I just really think people are being short-sighted where coal's concerned in the power generation space.
And that's great to hear. I mean, I just personally went back into BTU, which is my favorite coal name. And then right after it, Trump tweeted that he wants to do a coal, whatever national stockpile of coal.
Right.
But Jeremy, this is a stock you and I have talked about a lot, and I've been patiently waiting as it's just gotten crushed.
It did, and I love it. I mean, the chart is set up for a perfect reversal right where it's at. It just tested the mean today for support. All we need to do is confirm that it breaks the previous high and that little consolidation there. And we're looking at a pretty easy shot to about $19 for low end reversion. $20 would be about round in short term. Long term, I'm pretty confident it'll start chasing those highs around 26 pretty quick. The demand on it can be ramped up really quick. It's really easy to pull out of the ground. There's already logistics in place to transport it. It's pretty fast to turn the coal plants on. I mean, not instantaneously like turning your stove on with natural gas, but it's the next best thing. And also, like you said, if there's an issue where you can't distribute natural gas or something happens where you can't help people heat homes, well, they got to go to electric. And that power has to come from somewhere. So either way, there's going to be something burning to produce heat and generate electricity. And yeah, coal is the thing that people don't like to talk about. It's dirty and this and that. Let's compare it to wood. How many emissions you get from wood is insane compared to coal as far as cleanliness of burning. I mean, mind you, there are some biofuels that will burn in its place a little cleaner than wood, but comparatively,
expensive.
Yeah, expensive as all get at, So we're doing the best we can with what we have. One, as a world, the power grid needs to be supplied somehow. And sure, there's some alternative energy sources out there that are, more less damaging to the environment. But I mean that's going to take much more ramp up and a whole lot more land to make happen than we can get from very quick access resources. So.
I should add, if you don't mind, one other factor agitating in favor of coal. And I'm an old oil and gas guy, so I'm not a coal prophet for the coal industry or anything. But where natural gas is concerned, people do want to go into gas very strongly right now. The limiter there is you've only got one really scaled up manufacturer of turbines for these natural gas plants. GE.
Wait. Who is that?
GE Vernova.
Okay. Yep. I just bought that the other day too.
And there's currently an 18-month backlog for getting a turbine out of GE Vernova.
Wow.
And they're not embarking on any major expansion plans, okay? Because they're laboring under the belief that solar, particularly, and wind to a lesser extent, are going to overwhelm demand for natural gas here in the next decade. I think they're wrong about that. And a lot of other people think they're wrong about that, a growing number of people. But that's where that company is right now. So that timeline for getting new turbines is probably going to get longer in the near future, not shorter. So that's another reason why I think we're going to be building coal here in the near future.
Interesting.
Agreed.
You had also said something when we were talking before, and correct me if I get this wrong, but that the supply of natural gas right now was still, even though there was a lot of demand, the supply was more than the demand.
Yeah, and I think we're in a structural situation there for natural gas. I mean, we've seen the price get stronger over the winter because we had low storage levels. But right now, when you look at it, we've only got about 80 rigs nationally drilling wells that are going to be classified as natural gas wells. Well, the big driver of gas supply, though, is you have all this associated natural gas in these technically oil wells being drilled in the Permian Basin, the Bakken Shale, the DJ Basin. You know, all these shale formations produce a lot of associated natural gas along with the oil. And so the Permian Basin, even though you don't even have one rig drilling what is technically a natural gas well, is the second biggest natural gas basin in the United States. So, and so we just have an almost limitless capacity to produce more natural gas than we currently are, and do it very easily with just activating a dozen or two rigs. So it's a situation where the resource is so immense here, we can almost meet unlimited demand for the product and do it pretty easily. And I think that means we're going to be in a structural low gas price situation for a long, long time. And it just means we've got the ability to expand LNG, expand natural gas power generation in the United States pretty much.
Jeremy, I'm smelling a UNG put buy coming up here.
I think you're right. I was just looking at the chart. I'm like, that's a nice looking reversal there,
yeah,
huh?
I mean,
I'm not trying to go bearish on any stocks, but yeah, it's
Well,
no. So yeah, UNG, it's the natural gas ETF, and we call it the Widowmaker.
Yep.
Because when people try to buy it, it tends to go down like 50% in a couple of days. But it's been in an up. I mean, it's almost doubled this year. I've tried to short it a couple times this year and have had my head handed to me, but I'm looking at it again here.
I think the bearish
Especially now that you're
momentum
telling me that supply beats is over demand.
Bearish momentum on my end looks to be picking up.
Can I go back to earlier what Jeremy was saying about wood? So, I mean, do you have like a wood burning stove at home? Is that how you're doing your cooking and heating and all that? Or so why are you comparing coal to wood? I mean, I don't, how does that fit?
I'll put this in, and it's going to take me a minute. So I have a natural gas stove in my house. I love cooking on that, by the way. My whole family, all my kids love cooking. My youngest made the most amazing chicken scallopini I've ever had in my life last night. It was awesome. Long story short, I'm in an area where sometimes we have power failures occasionally here. All the power's underground, but there's a lot of trees in the state, and roots love, tearing up things and people crashing into poles, what have you. Long story short,
so you're burning wood.
I burn a lot of wood as auxiliary heat in my home. However,
interesting.
I've also, as an auxiliary thing, if there's going to be a long-term situation where I need to heat my home and there's no other source, and I run out of wood, well, I personally, I love fabricating steel. I built an insert to burn coal in my fireplace, and a load of coal, about 4 or 5 pounds of it, will burn for about 12, 15 hours overnight and heat my house the entire time. I don't have to throw any more logs in it, and it's actually clean burning. There's not a hint of smoke coming out of the chimney. Mind you, this isn't the dirty coal that they call it. This is anthracite coal. It's very clean burning, and the amount of heat it kicks out is incredible. It just keeps on coming. I have to open windows in the wintertime if I run that, so it works. And
so, David, this is what I get for being a smartass, right?
Yep.
Well, that's all, but it's why the supposed energy transition from coal to wood, or from wood to coal, was begun in England 500 years ago.
Yeah.
But last year we burned more wood than we've ever burned for energy. So energy transitions never result in the elimination of the existing power source.
So
Agreed.
let's talk about that for a minute. You mentioned solar, and you think that GE Vernova is not ramping up because they think solar, the solar stocks have gotten crushed this year. People figuring, Trump's not a solar guy. What are your thoughts on that? Are we going to have an energy transition to so-called clean sources like solar, or is that just going to fall by the wayside?
So I'm an old oil and gas guy, so I'm not a prophet for renewable energy, but I think solar has a far brighter future, not just in the United States, but everywhere than wind does. I think wind is being increasingly seen as a very damaging energy source that does a lot more harm than it does good to the environment, endangered species, et cetera, than it generates in real energy. But solar, on the other hand, I think has a different reputation, and the outlook for its expansion is pretty strong. And I expect that to remain the case, even in the Trump administration, because the Trump administration, when you look at Chris Wright, for example, he's always been an advocate for solar expansion. Okay, he's a natural gas guy, but he's always been very positive about solar, and I think Doug Burgum is too. So I think we can expect solar to continue to expand pretty rapidly in the United States. The problem is renewables can't expand rapidly enough to even absorb the pace of increase in demand. So we still get 80% of our energy from fossil fuels, just the same as we did 30 years ago. And yet we've spent 10, $12 trillion globally on these renewable energy subsidies. And that's just the reality we're in. Until we're able to get these SMRs going in a very rapid expansion, you're not going to see any real reduction in fossil fuels. I believe strongly that nuclear is the real future for zero carbon energy. And you'll still need to use oil and gas for chemical processes, plastics, fertilizers, all that stuff. But in terms of power generation, I think the future is clearly nuclear's to win or lose, and I think it'll win.
Yeah, and I agree with you 100%. BWXT is the name that I like there. And then you've got, Jeremy and I talk about SMR and NNE and Oklo, and and we've on our watch list podcast, we've made some epic calls on that. I mean, I'm long SMR right now, but again, I think that's more of a trading stock than BWXT.
Oklo's setting up again.
Is it? I gotta look at Oklo.
But SMRs just have so many advantages over renewables and big nuclear plants, both, just in terms of being able to site them right in the demand centers and avoid having to invest billions of dollars in new transmission lines and all that stuff. It's just, I just think it's got so many advantages, it's inevitable.
There was one thing I touched on briefly, and I still have a list in the theme that I'm watching, and it hasn't really done anything yet. But I started going out and looking for kind of lower producers alongside of other energy storage solutions for like home storage or commercial energy storage. And I got to wonder, is that kind of a grid saver? Because the idea is if you do this right, you draw from the grid in non-peak hours overnight, charge those up, and then distribute them during the day during high demand. And essentially that will help things out as far as supporting the grid strength. But it's kind of a band-aid on something that we really need to do is revitalize the entire grid. So yeah, I can see the demand coming up. I can see the idea for either local power storage or even local nuclear power generation near as possible to the server farms to keep them fed for all this stuff. But the other side of this is how does that ramp up, and when would it be scalable or even conceivable to basically rip the Band-Aid off and actually fix the grid. It's aging.
Right. Yeah. And that's right. I mean, that's all great points. So much of it just has to do with permitting and getting the government out of the way.
Yeah.
I mean, the government has a very important role to play. They have to ensure for safety and standards. And I'm not saying there's no role for government to play, but we've gone way too far in one direction, just in terms of government control of everything, without realizing what you're doing to impede the progress of the ability of these grids to, to modernize and to, maintain reliability while expanding to meet all these new demands. And, where nuclear is concerned, it's just the fact that it right now to get a big nuclear plant permitted, just the permitting alone is 15 to 20 years. Then you've got to, get the financing in place and build the thing. So it's just it can't stay this way where
Right.
SMRs are concerned. We have to get to a point where you can get the permits in place, and maintain, ensure safety and standards in 2 to 3, maybe 4 years, which is a more than reasonable time to get those things done. And it's hard to do in our system of government where you tend to change administrations either every 4 years or, in the best case, every 8 years. And so all this back and forth, you have to find some way. I think Congress has to play a major role in this to find some way to ensure continuity of policy from administration to administration. And that's been, Congress has unfortunately given up its role in that regard over the last 30 years, and I don't know how they get it back. So there's just a lot of, it's a real problem for everybody, and I don't have any magic bullet.
There is one more nerd question I had, and I got to wonder if this is going to catch up to that time that's going to be involved in just the permitting process, but possibly even further out when things start to actually assemble. I've been kind of following fusion, and I almost wonder if that's going to catch up before this all goes through. That's a question that's kind of been on the back of my mind this whole time. And right from the start, from when Matthew and I were first starting about getting into the nuclear theme, that was in the back of my mind. I'm like, man, I gotta wonder how much time are we looking at here before fusion catches up, if it will.
Well, so I don't want to be Debbie Downer on that, but I can remember people talking about fusion in the 80s and how it was just around the corner, and it's like the new generation of stationary battery technology to back up wind and solar. Every year we see a dozen stories about how that's just around the corner, but we never get around the corner. Okay.
Right.
And I know, of course, there have been advancement in fusion. And, some people believe maybe in the next 10 to 20 years, it's going to become a reality. If that does happen, it could overwhelm SMRs and everything else, potentially. But it's been an awful tough nut for the finest scientific minds in the world to crack for a long time. And I think, where government policy is concerned and investors are concerned, you have to kind of live in the world that is, rather than the world you think is going to come, particularly with something like fusion that has made all these past promises that it's never kept. And so and I don't give investment advice. I don't live in your world, so
I agree with you on that, Doug.
That's all right. We're good at that.
Can I ask a couple things here?
Sure.
Am I-
Yeah, go
Okay,
ahead.
sure. I need you need me in this a little bit. So
Yeah.
the first one's like a Jeopardy question for the three of you guys. I'm sure Dave is going to get this one first. And I sent this to you. I want to make sure you did your homework. So natural gas is measured at the Henry Hub in what increments? Do you guys remember?
Not even close.
David?
come on, MMBTUs.
Yeah, million BTUs. So you guys missed that one. Sorry.
I was going to say BTUs, but yeah.
But a million
Yeah, you already
BTUs.
have BTUs.
Right. So, David, you said like 80 rigs are out there drilling for gas, right? I mean, it's kind of hard to imagine. It's like, is 80 a lot or a little, or, it's what's 80?
Seems like
80 could be
seems like a
anything.
little, but
It's
Yeah.
very few. Yeah. I mean, overall, there's about 560 rigs, oil and gas rigs running in the United States.
So do people still talk about day rates and all that? Is that still
Oh,
a
sure.
thing? Okay.
Yeah.
So like, how are day rates these days?
Well, they came down to some extent here recently, but they're still way higher than they were 4 years ago, like everything else. And that creates a big problem with the Trump agenda, this drill baby drill agenda, because he wants to, at the same time, cut oil prices from $70 down to $50 a barrel. That's a 40% drop. And, if you're going to do that, you're not going to have more rigs activated. You're not going to drill more wells. You're going to drill a lot fewer wells because everybody's costs have exploded over the last 4 years, related day rates, materials you need, labor, everything. And so companies that would have been profitable at $50 4 years ago are really struggling to maintain profitability at 70 today. So you go back down to 50, you're going to see that 560 current active rigs, you'll probably see 200 of them laid down within a couple of months, so it's a real problem just for everybody, just in terms of the piece of the Trump agenda that envisions lower commodity prices.
let's stay on that for a minute. So I just brought up a chart of the oil drillers, and I've stayed away from them because in really because of what you said. You've got drill baby drill, where you think like, wow, that's great for the oil drillers, but then at the same time, Trump's whole policy on bringing inflation down is bringing down oil prices.
Yeah.
And this is you would have been done great buying it off the bottom here, but this has just been real choppy, tough to trade. I mean, I've stayed away from it. I don't know about you, Jeremy.
I'm not messing with that.
Yeah.
I got better things to do.
So how would you grade Trump's policy on energy so far?
Well, I think it's, so I'm totally in favor of it. Okay. I think every aspect of it is good. In the long run will be positive for the country. And that's how I look at it. Is it positive for the country? I think all aspects of it are. For the industry, you'd probably give him a C plus or a B, because that aspect of the set of policies, the low prices, is going to be really tough for some of these companies to deal with. The rest of it, though, is entirely positive. You're not going to have this. Over the last year, the industry has had to deal with millions of words and new regulations specifically focused on the oil and gas industry every month for the past year. Okay. Not thousands of words, over 1 million words each month. That's almost impossible to absorb for any company. And so that's all stopped. I mean, it's over and a lot of it's going to get rolled back. So that part of it's very positive. And just the other things, the speeding up of the permits for LNG infrastructure, pipeline infrastructure, all very positive. So taken as a whole, the Trump agenda is a lot more positive than the Biden agenda was. So
Can I
I
stop
think,
you for a sec, David? What about tariffs, though, right? So you say we have all the supply. What
Yeah.
about the exporting of LNG to wherever? What
Question.
about tariffs?
so yeah, the threat of tariffs
Bad
is
question.
very serious.
Oh, good question.
The
Right.
reality of Trump tariffs is they go on and a day later they come off. And so it creates a disruption just in terms of predictability and lack thereof, which any corporation, of course, tells you
Right.
it's a thing, and for obvious reasons. But the reality of tariffs is it's even if let's say you implement the 25% tariff on Canadian imported energy, right? What impact does that have on a company drilling for oil and gas in the United States? Virtually none. Major integrated companies that have refining, it's a different story, but it's still a pretty minor impact. So that they'll bitch and moan about it a lot, but just in terms of the real impact on their business, it's really pretty minimal.
We kind of learned something as traders. I was going to say about tariffs and policy. It seems to invoke more of an irrational and emotional response from whether it's the targets or the people who just don't understand it. But us traders, we have a way to like literally shut that off and just do the logical thing when we're trading and focus on nothing but the chart. Our emotions are out of it 100%, or you lose. So in retrospect, I like to see the pot stirred sometimes, because it is amusing to watch when you have the ability to shut off that irrational and emotional response and just kind of watch it. It's interesting because you can pick up some really good opportunities just being in tune with it. And the chart itself that we study so well is really a representation of how people and entities think or feel about the future of different companies that they represent. So when we take our emotions out of that and we just trade the chart, it's really just taking an analog and a very black and white and focused, non-emotional, rational response to it. So it's just fun to watch, and it creates opportunity. And as we've seen, the volatility, I thrive in that. I love it. And
My last question. All right, Matt, pull up the symbol of KMI, Kinder Morgan.
good one.
Yeah.
So, David, what do you think about the transmission companies? You call this transmission, right? Natural pipeline. Are what prices go down or stay? I don't even know the right question to ask. I always thought if prices are lower, these stocks do better. Maybe that's not true.
Well, and that could be the case. I don't know, but for a company like Kinder Morgan, I'm glad you pulled them up because I own some of that. And I'm very happy in recent months. So for Kinder Morgan companies like that are pure transmission companies, it's all about supply and demand. And is there more demand for you to build more pipelines? Or are your current pipelines full, et cetera? And right now, over the past 6-8 months, it's been a pretty positive environment in terms of the pipelines being full. And now you're moving into a positive environment for building more pipelines, right? You're going to get them permitted faster. The demand is clearly there coming out of the Permian Basin and a couple other shale basins. And you might even be able to get in on some projects to move natural gas from the Marcellus Shale through New York up to the New England states, which Trump is really leaning hard on New York Governor Kathy Hochul to get out of the way of. So this is going to be, I believe, a really strong 4 years for these companies to build new infrastructure, get it permitted quickly, and get it built, rather than struggling to get the permits in place and then maybe not even get to build it once you do, due to other factors that intervene. And a company like Kinder Morgan, it should be a very positive 4 years, I would think, for them.
I like this chart. Undercut and rally at the 50 day.
I'm looking at it too.
I want my commission on that trade, by the way.
Yeah, I mean, here's the weekly. So this is why David's happy.
Yep. And I was going to point that out because a lot of people will see this as a triple top, and typically this pattern in price action is bearish. I don't think so. I think there's definitely some alpha to be had in here. I'm hoping that the shorts will sweep some liquidity back to 27. I can get in. I doubt it, but yeah, this looks like a great opportunity. I always like to say, don't trade the setup, trade the break. I will wait for the break, but there'll be opportunity here. This looks good.
And I'm sure you guys saw the court decision in North Dakota awarding Energy Transfer $667 million from Greenpeace yesterday, right?
Yeah.
I saw that. I did see that. I thought that was interesting. Dave, I can ask one more question. I'm sorry, guys. So I used to live in Minnesota, and I was in the financial business, and the Bakken was just taking off, and all this and that. It's gone up, gone down. What's the status out there these days? I mean, is that still like a boom town, like $170 for a haircut, and all these things, or no?
Yeah, not so much. I mean, it's kind of like the Eagle Ford Shale in South Texas. It was a big, huge boom town for a decade. It's all calming down. It's still a fairly active drilling basin, but not like it was 6-7 years ago. The production has probably close to peaking out of the Bakken. The returns in that basin are not like they are in the Permian Basin. Permian Basin still has room to grow for I don't know how much longer now. I mean, the resource in the Permian is just so much huger than anywhere else. It's a different thing, but so the Bakken is in the development phase of that play now. Business is still probably pretty good up there. You know, there's still quite a bit of oil and gas activity, but you're not being overwhelmed by the traffic issues and the man camps and all that stuff.
Right.
I'm wondering why Pat would need to pay $170 for a haircut.
Just so you didn't, I actually have hair, but I like cut it myself. I cut it. I actually do have hair. I'm going to ask one more question.
You can tell.
Just,
I have hair too, but I like
I'm
to cover it up with a cap.
I'm getting you back, buddy. I'm getting you back. Promise you
All
this. But all right. So last question. I'm sorry. So Dave, I've heard you talk about Landman and all that. I don't even know if these guys know what Landman is.
Oh yeah,
But, like,
no, I've been watching.
So, and I know you, I think I heard you say what it says, but like, how real is that, by the way? I mean, you know, is like, are you cooler than that dude, or is he cooler than you, or is it kind of the same?
He's much cooler than I am. Yeah.
Right.
No, so the thing about Landman is people in the industry, some of my friends have gotten angry about it because Billy Bob Thornton in that show is really not playing a landman at all. He's playing an area production superintendent or area drilling superintendent. And so my response to them is, if you're Taylor Sheridan and you're developing that show, the word landman is a lot more catchy title for the show than area superintendent, right?
Yeah.
So it's
This sounds like Matt's webinars, by the way.
right,
Yeah, pretty much.
right. As far as the reality of the show, yeah, you know, I mean, I've really been really pleasantly surprised with how accurately it captures
Oh, cool.
the feel and the activity that's happening in the Permian Basin in and around Midland. But on the other hand, I'm not real happy about the fact that in the first 2 episodes of the show, you had 3 different major blowout incidents at 2 different
Right.
locations that killed 7 people. There probably haven't been 7 workers in the oil field killed in the Permian Basin in any year of its existence. So that part of it's a little worrisome. I worry about people thinking the industry is that unsafe. It is a hazardous industry, but the steps these companies take in terms of safety are really amazing. But overall, I just think that show's one of the most entertaining things I've ever seen.
You know, I'm kind of like an underground marketing guy, you know, so I thought that there was that one, you know, TikTok or whatever that went around about Billy Bob talking about how you need gas and everything to his daughter, you need it and everything. I thought that was probably the best piece of marketing for the oil and gas industry ever, perhaps.
True
You know,
story. I put up a post. I took that video clip and put it up on LinkedIn with some commentary of my own. And that thing went completely viral.
that's maybe how I met you in the first place. I
Yeah.
bet actually.
Over 1 million views of that on my LinkedIn account.
That's what it was. I was one of those.
Crazy, man.
I'm gonna have to connect.
Yeah.
Yeah.
So it's got a big audience too, and it's the first time I think the industry has really gotten a fair treatment in any television show on, mass communication television. So I'm really grateful to Taylor Sheridan for doing it.
So
Let's
can I
go
talk
back
about some more,
to,
Matt? You got some? Oh, go, Matt. Go.
I was
Yeah,
noticing you got a
let's go
chart up.
back to $50 a barrel oil for a second. So obviously we know Trump wants to do that.
Yeah.
And another thing that we've talked about a lot, in my newsletter is Trump wants lower interest rates, but Trump doesn't control that. So all he can do is browbeat Powell, and Powell didn't lower interest rates yesterday, and Trump tweeted, "You should have." Nothing happened. Does Trump have levers to pull to get oil to $50 a barrel?
Well, he's got a lot of problems with that himself,
Question.
right? Because he doesn't want Iran to have unfettered access to oil markets. He's probably going to move to inhibit their exports. He's already moved to slow down what's coming out of Venezuela, and that all impacts the market. But you've got OPEC Plus trying to put more oil back onto the market because they've had these artificial cuts in place for a long time. And that, if you continue to grow U.S. domestic production, you're going to maintain an slightly oversupplied market regardless. And then if you end up with a peace deal with Russia and Ukraine and take the sanctions off of Russia, that's going to put even more oil back onto them. And so he could do it just by not doing anything to shut down Iran. He could create really an oversupplied market by 1 or 2 million barrels a day. But I just think we're going to probably end up reinvoking sanctions on Iran before too much longer. And that's going to rebalance the markets. And he's going to have a hard time pushing oil prices down that low if the economy responds to his overall economic policies. Because then you're just going to have rising demand that's going to eat up any excess in supply. And his $50 oil just isn't going to come about.
Good points.
All right. Yeah, Jeremy, I'm kicking myself. I missed this short.
I know, right? I was just looking at that.
Wow, pull up a chart of EQT.
Yeah.
Right? I had EQT before. That's my favorite natural
Okay,
gas.
so look at this, right? Like pull up like a 5-year chart of the stock. Can you do that? Do you even do that?
Here, I'll do this.
Yeah. It's monthly.
Here's a monthly.
Okay, so look how well that thing's performed since 2020. I thought that was amazing. And then if you could run like a chart of the LNG prices over that, they don't really correlate, honestly. I don't think so.
Nope.
So what does that tell you, David? I mean, it would tell you EQT can make money in any environment. I don't,
Yeah.
I'm not the guy, but that's what I'm asking you.
Yeah, they're in a catbird seat up there in the Marcellus Shale. They're in some of the real sweet spots, and so their wells, per well performance is really high. And so even if you're down in a $2 price environment per MMBTU, they're still making money. Now we're in a $4 environment. At least in the short term, I expect it's going to go back down again, but they'll remain profitable even at that level. And I think that first chart of them you showed, the daily chart you showed a tick up in the last week or so.
Yeah, which is when I bought back into them.
Yeah, and so that's probably in response to Trump's, posturing with Governor Hochul about getting those pipelines built up into New England, which is insane. You can't move Marcellus gas 125.
Right? Doesn't New York import instead of getting it from us?
Well, they've got some pipelines going into New York. What they prohibited is any interstate lines going up into New England. And so the New England states are having to import LNG from Qatar and Algeria, Russia, Russia.
That makes zero
It's
sense.
insane. Yeah, it's insane. But EQT would be one of the real beneficiaries if those pipelines do get built. And so I suspect that a recent uptick is a reflection of that.
And any thought on Antero Resources? I don't own this one. I own EQT, but I've owned it in the past.
I'm not intimately familiar with them.
Okay.
I haven't written about them, so I don't want to say anything.
No, not a problem.
So, as I say, sometimes I'm a bit of a bottom fisher here, and I've been kicking this trade idea around a little bit. NFE. And then I know we discussed a little bit about infrastructure before the call here. And Patrick, I know you're keen on looking up the description of the company. If you want to read that, it's great.
What does it say, bro? I actually have this stuff written down on paper, bro. But if you tell me what it is.
Sure. So New Fortress Energy is a infrastructure company. I mean, it funds, builds, and operates natural gas infrastructure and logistics to deliver energy solutions, and it gives you all the market structure in it. But the idea is that this is one with AI power demands. Of course, we're going to need infrastructure. These guys do kind of both. They do power generation as well as delivery infrastructure. I think they would stand to benefit from this, and that chart looks like a very good discount right now. I'm kind of looking at short-term stuff where we're looking at 90% possible return on this in the midterm. Short term, I'm probably looking more like 25 or 30, but that's huge. In the structure of things is, there's all kinds of political roadblocks in place. I got to wonder if that gets kicked out of the way and things get smoothed over where we can actually get something done in this country.
Yeah. So one of my recurring themes here recently has been that Trump is probably not going to create a drill baby drill boom, but he's going to create a build baby build boom in infrastructure related to energy.
That makes
And
sense.
it's all kinds of infrastructure. I mean, we're already seeing a revival of LNG export pipeline, and you're going to have the same thing happening in power generation and all forms of energy infrastructure. We need more of it. Need more of it fast. So one of the big focus areas, the main focus areas of the Trump administration is going to be getting all these barriers to building things out of the way. And
Right.
so a company like this, again, I'm not giving investment advice, but you would think they would stand to benefit greatly from that.
So
So
I'm
these
gonna
guys,
when we get off, I'm gonna ask ChatGPT why it declined so much when everything else was going up. Because there's got to be a reason, and hopefully it's just not a good one.
so
Hopefully.
they build, operate liquefaction facilities onshore and offshore, regasification terminals, pipelines, power plants, and small scale solutions. Jeremy, buddy.
So that's right in the
All right,
wheel.
last question. So we've really totally skipped like Exxon, Chevron, these big integrated guys. I mean, there's a bunch of them. I mean, that must be where all the market cap is in it anyway, right? So what do you think of those names, David?
Yeah, well, I wish I owned had bought a butt ton of ExxonMobil 5 years ago. That would have been a good place to be. I think it's still a good place to be. They more than any of the other majors are really extremely well positioned, I think, to continue to grow here in the coming years. They've got these, not just the domestic, I mean, they're the biggest producer in the Permian, obviously, in the United States, but internationally with Guyana and some of their other international investments, they're just really well situated. And that, that buyout of Pioneer Natural Resources year before last, 18 months ago, there in the Permian was just a
Matt, can you pull up a
perfectly
chart of that
timed
XOM,
acquisition.
please, sir?
Yeah.
Thank you.
Yeah.
That's a great looking chart, actually.
Yeah, they're
It's
doing
better than XLE.
Yeah. By far.
And I don't want to discount Chevron. If they can get that Hess deal finally finished, they're going to be a minority owner in Guyana in the same project, and they're going to do really well too. But they do need to get that Hess deal finally out of arbitration and approved.
Do you have any thoughts on Occidental? I mean, that's Warren Buffett's favorite, and it just has really stunk.
Well, I would never presume to argue with either you or Mr. Buffett. I mean,
That's my job.
Again, it's another company that's extremely well situated in the Permian. Yeah, I just don't know about their other operations. One of the big problems I think they have is they have a big position up in the DJ Basin in Colorado, and they're getting regulated out of existence up there in that state. And that's probably, I mean, I'm just a guess, but I would suspect that's been a lag on their stock price growth.
I have
I
to
think
agree.
any company that's got a big position in the DJ Basin in Colorado or any other Colorado operations is really in a tough spot.
Yeah. It's
Matt,
it's a
not to put you
shame.
on the spot here, but doesn't this kind of like isn't this a Matthew Tuttle special on this Oxy, or am I totally missing it?
Yeah, I mean, it's just really choppy all over the
Too
place.
choppy.
And it looks like it could be a double top short sale, and it's bumping up against the 50-day moving average and not being able to break above it.
Have a look,
So I mean, that's nothing that I would buy.
have a look at the
God,
2 hour,
I
and it
hope
tells you, yeah, don't buy
Jeremy,
that.
ChatGPT gives New Fortress Energy a 6 out of 10. It's
Hey.
a little bit worried about what you got here. Operational delays, financial losses, a credit rating downgrade, and some legal challenges.
Credit rating. Maybe if the rate drops a
Hey,
little.
can I add one more point about Exxon that I should have?
Please, sir.
Yeah.
That Exxon is the one major that has found ways to invest in low carbon solutions in a profitable. They're doing
Right.
carbon capture in a profitable way. They're doing blue hydrogen in a profitable way at their Baytown facility. They're doing lithium extraction, in a profitable way, where these other companies, and we've seen with BP and Shell in particular, and Equinor, have invested in all these wind and solar things that are not profitable, and now they're having to divest them. While Exxon is just continuing to grow these. It's really, people don't like to talk about it, the green people don't like to talk about it, because they've really been the one oil company that's found ways to do these things in a profitable way. And it's
That's what our guest last week said as well, by the way, Matt, if you remember correctly.
Yeah.
Who's that?
I did not remember that.
Yeah, remember you were talking about, are the oil companies going to, go bust if we get this,
Well,
better
I
propulsion
mean,
systems? And he said, well, no, they're actually the ones that are the leaders in this green stuff. They have other
Right.
things going on, and that's what he's saying. So that's interesting that you say that. That's actually really a big takeaway for me on this conversation.
Yeah.
I like to think that
So
Exxon saw the writing on the wall decades ago when all of the environmental stuff started coming down on it. I really do think they took that choice to innovate this to the point where, yeah, they love being able to be as green as they can.
Right. And they just philosophically will not engage in a project that they don't believe is going to be profitable. And these other companies,
Neither will I.
To signal virtue.
Maybe I should talk to them about a
gosh.
product I have in mind, but that's later.
All right. So are we at our peaks here?
No, we got a few minutes left.
Just Jeremy, just if you're not watching, the market is now trying to turn negative. So
Dave, I want to give you a chance to, shout out your website, or do you have a sign or anything you want to hold up, or flash a signal or anything? Tell us what you're doing, where you're at.
So for me, it's the simplest thing in the world. Everything I write, talk about, is going to end up at a Substack site called blackmon.substack.com. Energy Transition Absurdities is the name. You can just Google David Blackmon on Substack and it'll come up.
It's MON, guys. MON.
MON, and yeah. And everything I write, I end up republishing there or linking to, and the same will be true of this podcast. So
cool.
I'm gonna add that.
I tried to make it easier for you.
Appreciate that.
Thank God for Substack.
I'll get in there. I like Substack. I get a lot of good stuff from there. Yeah, Matthew, this is trying to, I think, just do a reversion back to about 480. We'll see if it holds here on QQQ. But we got a shot at seeing some liquidity sweep it right there. I want to watch this. Market's determined to find some liquidity in this range, and it's got two ways to go.
We're seeing this chart, are we?
No, I got to get the. Oh, Matthew, you got to
hold on. I moved it down. I'm
kind of
sorry.
weird.
That's my bad.
Not my bad. Here, let me grow it a little bit on the bottom there.
All right.
I love OBS. I can do anything in real time. It's great. But what I'm looking at is the market right now. It literally has two ways to go. We've been beating this, every week now, saying be careful, be careful, be careful, and we're at the kind of end of the crescendo, so to speak. Here, we're really close to a break, one way or another. Political theater, it's batting at it a little bit. Of course, you got. I guess I heard, Ukraine broke the ceasefire or something this morning, or threatened to. I don't know what the deal was, but looking at that stuff, it cracked our prices down on the pre-market right to support. And I spent the morning session with bullish bears scalping the heck out of the bullish move back to the top. So we're right about at the end of a point. I mean, if you zoom out on like a 2-hour chart, you'll see it's coming to a point like probably today or tomorrow, and we should see a break very soon with this. So the market tends to move in waves, and it tends to, any impulse it has, it loves giving half back first to kind of check itself and see what's next, what's next price exploration. And we're right in the middle. Just give it a moment. It's not going to take long.
Cool.
All right. Thanks, David. Thank you, guys. Have a good day.
Yeah.
Appreciate it very much, sir.
Thank you all.
This is always
Really
great.
Enjoyed it.
And we got to do a quick outro. Thank you for watching us, and we really, really appreciate your support. This is something that is growing in a way that I really love. I love being here and being a part of this, and I think this is something that we should get in front of a lot more people. We do some important stuff here, believe it or not. So thanks a lot, guys. How wonderful.
Yeah, I mean, and please like and subscribe, and and reach out to us with ideas of things you want us to cover and people you want to be on.
Absolutely. And we take
All
requests.
we love you too, Jeremy.
See you guys.
Especially Matt. Especially Matt, by the way.
Oh man,
see you
I
later.
don't know.
It's-
I
it's
don't know
been-
what that means, but
it's been symbiotic. I mean, he's been on the Kramer thing and the watch list thing with me for over a year now. I mean, we're becoming friends, I think, is what the problem is, and we don't know where this goes, but I think we built something already, and something is kind of growing here.
we got some good stuff coming. Unless I wake up one morning, I'm like, what am I thinking? But
All right.
yeah, I think we may have a newsletter service coming out soon.
Excellent.
Okay. All right.
All
Later,
right.
fellas. See you.
See ya. Thanks, guys.
All right, bye. Everybody.
Free Tax USA, where federal filing is always free with no games or pricing gimmicks. Because choosing your tax software shouldn't be a guessing game. Companies may claim their federal tax filing is free, that is, minus the hidden fees, high prices, unlimited add-ons. No way. And when you're ready to submit, it's not really free. Not this year, my friend. You have found Free Tax USA. Say goodbye to forced upgrades and unexpected fees. The only trick up our sleeve is free federal tax filing for everyone. Plus, filing a state return is less than $20. Go to freetaxusa.com.
Let's compare a HELOC to an alternative that comes with no monthly payments. A HELOC is a line of credit from your home's equity and typically requires an extensive application process, has strict debt to income requirements, and comes with unpredictable fluctuations in interest rates. Not to mention, you'll be making monthly payments. A home equity investment from HomeTap, on the other hand, also gives you access to your home's equity in the form of cash so that you can use it for whatever you want. A home equity investment is not a loan or a line of credit. Therefore, there are no monthly payments and you have up to 10 years to settle. Home equity investments can also have less stringent qualification criteria. For example, there's no debt to income ratio requirements and more flexibility with credit scores. For more information and to see if you qualify, tap this link.
It would certainly help my cause. Poet. You ain't no poet, bro. And we just got stopped out of that for a loser. Wow, that was really, really annoying. I added into that a million times into VWAP, and it didn't hold any level. So lesson learned or not learned. We'll wait and see. I'll tell you tomorrow whether I've learned my lesson or not. So back to the one where we're actually doing well on PSTV. Let's see if this one can take out that $130, Joe.
Yeah, good luck there, Stevenson. Would you say it happened again? As soon as I go ahead and take my little profit, we tanked 3 minutes later. I exited SPY QQs at 12:59 just to get it done. I was waiting on just a little while, and boom. Yeah, I mean, that's what it is. And Gaurav and I were talking about it. Look at BC. You are impressed, says Sebastian. Okay. I mean, yeah, Bitcoin's starting to tank. We held 49.50 relatively well. So, yeah, here we go. We're waiting for these lows to hold here, guys. And if